All right, getting ready. Audio check, check. Oh, yeah, we sound good. I love the way I sound on my Shure MV7 mic. Waiting for a few people to jump in here, and we are going to get ready. We're going to go. We're going to go right now. Okay, everybody, we're getting ready. No, we're ready. Okay. Hey, thank you so much for joining me. I'm Mitch Goldberg, your host. You're watching Be the Boss of Your Money. It's my post-market show that I do every Monday through Thursday at 4:30 p.m. I'm so glad you joined us today. We've got a couple of things to talk about. Quick market update. It was looking like a shaky, ugly day, but things turned around pretty good. I'm going to show you exactly what made the market go up in terms of the S&P and the NASDAQ and why the Dow went down. And more importantly, we're going to talk about the big topic of the day, a Bitcoin ETF. Is this something that you should actually consider for your hard-earned money? Is it something you should take a pass on? I'm going to explain to you what the Bitcoin ETF is all about. It's coming out tomorrow from a company called ProShares, if you haven't heard about it. And that is a really big topic. So it's super timely. And that's what I'm going to talk to you about right now. So here's a quick intro, and then we're going to jump in. Here we go. All right. Thank you so much for joining me. I see a few of you out there. While you're out there, give me one of these, some of these, a thumbs up, a heart reaction, something. If you're just listening and you're driving, don't worry about it. But while you're out there, give me a thumbs up or something. Let me know who you are. If you have any questions, please ask them in the comments. You know, I love hearing from you. It's the best part of doing this. If you've ever been a viewer of the show and you comment and ask me questions, you see, like, I get all giddy and crazy with it. So I already see a couple of comments coming in here. I'm going to touch on those in a second, but I really want to jump into the heart of the matter and not waste any more time, because not that your comments are wasting time. I'm pumped for your comments. What I want to say is this Bitcoin ETF is big news, and I want to talk about it because some of you, I feel like maybe I need to save you from yourself. Okay. So let me know how I'm coming in nice and clear. I've got the mic going. I'll just lower that a little bit so it's not aimed exactly at my mouth. And this way I'll sound good. And so you guys are out there, and Filippo, I see you out there, man. It's all good in the hood. So let me tell you what's going on first in the market, why the market turned around. And then we're going to take a quick jump into the Bitcoin ETF. It's really the Bitcoin futures ETF. And it's not what you think. So we'll do a quick share screen, pop myself up in the corner here. Here we go. Okay. So the Dow was down, big whoop, 36 points. After the rally Thursday and Friday, the Dow went up about 900 points between last Thursday and Friday. That is just a massive move, almost 900-point gain. So the fact that it was only down 36 points is no big deal. It was down about 150 once trading got underway in New York at 9:30 a.m. Things quickly turned around. The NASDAQ had a pretty decent day, continuing the rally from last week, up 0.84%, 124 points. It used to be if the NASDAQ was up 100 points, it would be something crazy, but now it's 15,000. And the S&P up 15, up 0.34. Gold continues to just languish in the 1700s. Oil up a drop. Okay, no pun intended, up a drop. Is that a pun really? Is that worthy of a pun? But oil, listen, it's up a hell of a lot. Oil is up what, 75, 80% this year so far. And how it's holding up like a champ. Whether if you want that to hold up or not. If you own oil stocks, it's good, but everyone else, you're paying through the nose for heating oil, airline tickets now, obviously to put gas in your car. U.S. 10-year Treasury, the benchmark, the marquee of bond yields globally, up a drop, yield up a drop, 1.59. It was in the 1.6s all day. The VIX, that's this over here, 16.31. It was up one hundredth of a percent. It was flat basically. I mean, that's unusual, by the way, for the VIX to be this tame. It was barely up. That is like a very unusual day, up 0.06 percent on the day. That's the VIX usually does not stay um, flat like that. It's usually jumpy like crazy. But you know, but if you recall, we always talk about the VIX, and once it goes above 20, volatility comes back in. The stock market goes down. Um, Investors, hedge funds in particular, they pay up for portfolio insurance. It's a sign of nervousness, a sign of a lack of confidence in the stock market short term. And then it goes under 20. People feel better about things. They buy stocks. The market goes up. And that's the line, 20. And when I said to you, if you see the VIX go under 20, the market goes up. And it could go up a lot. And that's exactly what happened. And it happens every time we talk about it. Let's just take a look real quick over here. Russ 2K, that's the Russell 2000, up 2 points, barely moved. So I'm not really, no great shakes. Up is better, I guess, than down. But either way, it doesn't matter much to me. This is why the market went up today. Okay, this is why the S&P and the Nasdaq went up. Apple was up over 1% today. Big news today, new chips, new updates to their Macs, good stuff. They're coming out with new earbuds, $180 for new earbuds. And I know my kids are going to be asking for these, and I'm like, no. I have right below, you can't see, but I have plugged in. I got new earbuds today, $29 on Amazon. They've got great bass, great everything. And, they sound every bit as good as my daughter's AirPods now. Okay. But Amazon up over 1%. Facebook up over 3%. I thought Facebook was going to zero. No, up $10, up over 3%. Google, Facebook, we have a love-hate relationship, right? We love to hate them, but you can't get away from it. Google up over 1%, Microsoft up over 1%, and NVIDIA up over 1%. NVIDIA was just like in the 190s, like 2 weeks ago. Here it is, 222. Microsoft was in the 290s. But the point is, the FANG M stocks, the ones that we talk about, these are the big, heavy-duty lifters, the big NASDAQ tech stocks. When these stocks go up, and it's really amazing to see all 6 of them are up over 1% on the day. That is something else. That's why the Nasdaq and the S&P went up. These companies are so big. When the ball of these stocks, when all 6 move together, they have this gravitational pull, and they pull the market wherever these go. If they all went down 1%, believe me, today would be or 1% or more. If they all went down, today would have been a really rough day on Wall Street. But the fact that they went up, investors are buying them in spite of what people think are higher interest rates coming down the road, because higher interest rates make high-valued stocks worth a little bit less. It makes their current earnings worth a little bit less, discount rate. Anyway, the point is, it was a really good day in tech land, and it was a pretty good day in the market. Forget the fact that the Dow was down 36 after the rally we just had. That's a victory in my book. Okay. Now I want to talk to you about the Bitcoin. All right, the Bitcoin ETF. First, comments. Filippo, what's good, buddy? Filippo says, what's good? Mitchell, here, you may begin. Thank you for gracing us with your presence and allowing me to get the show on the road. Okay. Hey, man, how am I sounding to you? I'm sounding good. I have that rich podcasty, the rich podcasty voice. Let me just make sure. Turn up the compression a little. Oh, yeah. Get that rich podcasty voice. I'm a little nasally today. I want to talk to you about something very important, very timely. The Bitcoin ETF, which should really be called the Bitcoin Futures ETF. A few things. First of all, it's going to start trading tomorrow on the New York Stock Exchange under the ticker BITO. Boy, Ira, Tom, Oscar. And it's not really investing in Bitcoin itself, in actual Bitcoin. Some people say physical Bitcoin, but I don't know if you could describe Bitcoin as something that's physical. It's digital. But it's not investing directly into the digital asset. It's investing in futures that are supposed to allow investors to either bet on the direction of the price of Bitcoin or to hedge their positions against loss if they're shorting it or going long, depending on their trading acumen and point of view. And it strikes me as like something that I think it's a media event. I think for a serious I think for a serious investor, it's not what it's all cracked up to be. And I think serious investors realize that this is not the uh, Bitcoin gateway to get this into your investment account, like your IRA or your brokerage account or something. It's going to invest in futures. It's not going to have any digital actual Bitcoin in it whatsoever. I went over the fact sheet from ProShares. That's the ETF company that's bringing it out tomorrow. And I went through the prospectus and I'll show you what I've come up with. But I'm going to say to start, because it invests in futures, this, in my opinion, is for day traders, short term traders. I don't know what you consider a short term trader, a swing trader, somebody who trades for a week or two, an overnight, a day trader, but this is for short term trading. This is not something that I see as something for a long term holder. I remember we used to have, and they're still there, but there were triple leveraged exchange traded funds, and the point is, this reminds me of those in some ways. Not that this is triple leverage, but futures are a way of using leverage. Now, why didn't we get an actual Bitcoin ETF, not instead of this futures contract based ETF? The futures market is it's heavily regulated. The Bitcoin market is not, and the SEC chair, Bob Gensler, who taught about crypto at MIT, who people expected would be a shoo-in to give a Bitcoin ETF approval. They played that card the wrong way. But Gensler is an MIT. I don't know if he's an actual professor, but he taught about Bitcoin and crypto and digital assets at MIT. He's a brilliant individual, and I think he is the right person for the job, considering how quickly investors are migrating to digital assets and how everything is seemingly becoming, well, everything really is digitized in a way. So let's get into this. We have the futures, it's regulated. And, as per Gensler, you really can't say that Bitcoin is regulated. A lot of Bitcoin, if not most of Bitcoin, trades on exchanges that are not even domiciled in the United States. There's no way to really show if the trading is truly honest, not manipulated. But futures have a way of dictating the price of Bitcoin, and the futures market for Bitcoin, although it's fairly new, a few years old now, I think it's about 2 years old, but it is fairly developed and quite liquid so that institutional investors could actually participate. Okay. So that's why they went with a futures contract. My issue with this, which for long-term shareholders, this is why I'm saying this is a for short-term holders, okay, or traders. With the triple leverage ETFs, if the securities that those tracked weren't moving up or down, the futures contracts expire worthless. If a futures contract is based on the price of a commodity, in this case, Bitcoin would be the commodity. Okay. If the commodity just stays exactly flat, does not go up or down in price, the futures contract will eventually expire worthless. Okay. And this is what the ETF is doing. It's buying short term front end contracts, meaning the contracts that are going to expire the soonest. And with triple leverage, if the underlying commodity just stay the same at the same price, because the leverage and the contracts, the leverage would eat up the money. the would I'm really trying to explain this like the best I can. Okay, it's those things that you really understand well, but then when you try to talk about it, you're like humming, humming, humming. The point is, as you have leverage, and then you have futures contracts which will expire worthless, and these types of securities that are based on futures could become much lower in value and potentially drop significantly. And people will be like, well, why did the ETF go down so much if the commodity, the underlying product, stayed the same? Okay, so let's relate that to the Bitcoin futures ETF. If if Bitcoin just stays exactly the same price, let's say $60,000, and you have futures on it, what happens is as the futures become worth less and less and less because they're short-term futures contracts, so they're very close to expiration, so they decrease in value pretty quickly. And before they completely go to zero on the last day of expiration, the fund manager will sell those for very little, providing that they're right before expiration and the price of Bitcoin doesn't move. And they'll use that money to buy new futures contracts. So they'll roll up the futures contracts. That's what it means to roll up the futures contracts. And if Bitcoin doesn't move and the contracts you're holding, the futures contracts are worth less and less, that means you're going to be able to buy fewer and fewer contracts going forward because you're going to have less money to play with, less money to invest, I should say, less money to reinvest. And that is why that's why I see the futures contract as a way for people to invest in Bitcoin futures ETF for short-term traders. But if you're in it for a lengthy period of time, and in this case, I'm talking a matter of weeks, and Bitcoin stays flat, there's a really good chance that you're going to lose money anyway. So unless you're having a really good rally in Bitcoin, then these ETFs could be explosive. They could actually go up a lot more than Bitcoin. So this is not for the faint of heart. And if you really just want to own Bitcoin and put it away and say, one day this could be worth X amount of dollars, and I just want to participate in the crypto area and see if it's going to be worth something, then I would say crypto itself is a better bet. Now, some people don't want to go through the process of opening up a Coinbase account or buying it through Venmo or PayPal, what have you. But there are ways to buy it. It's not that hard. It's really not hard at all. So this is why I am wary for long-term investors like my clients, my clientele. For the most part, I don't really see a place for them with a Bitcoin futures ETF because we're not here to trade. If I purchase something in a client's account, my thought process is 3, 5, 10, 15, 20 years out. We want to make a lot of money on our investments, not just buy something and flip it tomorrow and say, "Oh, look at all the money we made." That's just my own philosophy, my own point of view. So I'm going to show you what I've discovered here. I'm going to just close screen here. Yes. Okay. So here we go. So let's go to ProShares. All right. That's a bummer. It's not quite working. So what I'm going to do is I'll do a share screen. I could do that. Okay. Share screen. Screen 2. Share. All right. You see this? This is the I'm on the ProShares website. And if you take a look at this, by the way, just a quick couple of shout outs. Hey, Therese, so nice to see you. Thank you so much for joining me. That is really, I'm touched. It's really cool that you are actually taking the time to watch my live stream. Thank you very much. And good to be connected with you on LinkedIn. So great to see you, Therese. And Philly says they didn't want to create a real Bitcoin ETF because they want to hog it all for themselves. GBTC is a trust that holds Bitcoin, and some other companies have exposure, but always better to own the underlying asset versus the fund. Well, I think that's a good point of view. Filippo. So, I know that the Grayscale Bitcoin ETF has done a pretty poor job of tracking Bitcoin. It's like 31% below the price. Sometimes it's better, sometimes it's worse. But I'm talking about really from like a Kathy Woods point of view at ARK Innovation Fund. But what I would say with let me just stop sharing for a second. With regard to other ways of buying it, I look at this in a way like, let's say, the gold ETF, the GLD. Now, would you be better off buying gold, like actual pieces of gold, or should you buy the GLD, the gold exchange traded fund? The gold fund, the gold ETF, tracks the spot price of gold. So it tracks the price of gold in real time. The Bitcoin futures ETF will track a basket of Bitcoin near-term futures, but it specifically says this is not going to track the spot price of Bitcoin, and spot price meaning the actual price of the underlying asset, which is Bitcoin. But I'm looking at this and see if I could. No, still I'm going to stick to the screen one. And I'm going to go to screen two, and I'm going to share. So stay with me. I'm going to share. Oh, this is good. I love figuring my way around the technology. Okay, so let's take a look at this. Okay, let me make this a little bigger so you could see it on your screen. Hopefully, you could see this really well. Okay, this is it. This is the ProShares website, and this is what they have. This is here. The fund does not invest directly in Bitcoin. The price and performance of Bitcoin futures should be expected to differ from the current spot price of Bitcoin. That's what I just said, right? So it should be expected that it's not going to happen. Now, the Bitcoin futures ETF, I'm not going to call it the Bitcoin strategy ETF or the Bitcoin ETF. I think it should be called the Bitcoin futures ETF so that you actually know what's in it. And I think it's somewhat deceptive to not call it that, my own point of view. But if it does track the spot price, it's like it's happenstance. It's like an accident that it happened. And there's nothing to say for like I looked at daily holdings, and the fund does not invest directly. There's no daily holdings yet. Okay. Distributions, there's no distributions. It hasn't even traded yet. Okay. Holdings, there's nothing to say. But what I did look at is the fact sheet. And I don't know if you've ever seen a fact sheet for an ETF, but they have some information, they have positions, they have a little bit on it. Okay, so let me make this nice and big so that you guys could see it. Okay, the operating expenses on this is going to be almost 1%. It's definitely not a cheap ETF, but it is what it is. You don't have too many other places to go if you want a Bitcoin futures ETF. As far as this goes, what's in the fact sheet? Nothing. It's 2 pages, and the second page is just the same disclaimers that are on the first page. Right now, it's just disclaimers. So all you get is this little tiny bit of information. It's going to track, the CF Bitcoin dollar US settlement price is a once-a-day benchmark index for Bitcoin that aggregates trade data from multiple Bitcoin US dollar markets operated by major cryptocurrency exchanges that conform to the CF constituent exchange criteria. So it's supposed to, it'll one way or another, based on a burst of movement in Bitcoin, and you believe Bitcoin is in a strong uptrend, or you believe Bitcoin is about to drop like a rock, you could go long or go short this particular ETF as a convenient way to trade, not invest, to trade Bitcoin with a regular brokerage account with your broker. Go on an E-Trade or whatever and do it there if you're even allowed to do it. I wonder what kind of restrictions are going to be in place for investors to be even allowed to buy this. I'd imagine there could be brokerages that put restrictions and say you have to have a certain net worth, or it's got to be a certain kind of account. Your account has to be marked or approved for speculation, and options will be trading on this once it gets underway as well, from what I understand, according to a report on Bloomberg via Eric Balchunas, who is Bloomberg's main ETF reporter. And then yeah, we're right on time, guys. And then I'm going to show you this. Okay, so and I think this is the most significant thing. The prospectus is 9 pages, which is pretty short for a prospectus. But let's take a look here, and this is what I want to show you. Okay, um, let's see. I want to make sure I'm looking at the right thing. So just give me 1 second. I thought I had this already over here. But if you look at the risks and an article I saw on this, they have to roll up the ETF, the futures. Okay, here it is. This is it. This is what I want to show you right here. Okay, when rolling futures contracts that are in contango, the fund will sell a lower price expiring contract and purchase a higher price, longer dated contract. The price difference between the expiring contract and longer dated contract associated with rolling Bitcoin futures is typically substantially higher than the price difference associated with rolling other futures contracts. Okay. Bitcoin futures historically experienced extended periods of contango. Contango in the Bitcoin futures market may have a significant adverse impact on the performance of the fund and may cause Bitcoin futures to underperform spot Bitcoin. Both contango and backwardation may limit or prevent the fund from achieving its investment objective. Okay, that is like so significant. All right, it's just really the most significant thing I can tell you about this Bitcoin futures ETF, and I refuse to call it a Bitcoin ETF because it's not, and it clearly states that in the prospectus. But what the marketers do and what the prospectus says are supposed to be in alignment. Let's say they're not, in my opinion. But the point is, when you have short-term futures contracts that are very close to expiration, they become almost worthless, or in some cases worthless, unless the price of Bitcoin skyrockets, and in that case the futures that track Bitcoin would skyrocket also. But if that doesn't happen, you're selling something for pennies and you're buying something for a higher price. It's so you're selling low and buying high over and over if Bitcoin doesn't show significant movement. And that's what I don't like about it. It's like it's going to be great in a rip roaring bull market for crypto, and I think it's going to be not so great for anyone who's in it for more than a short amount of time, and that's why I think it's really not for your average everyday ordinary investor. I think it's a way to take a shot for a short-term trade. Maybe some institutional money will use this as a way to go. And one more thing, and I just humor me for a second, because I thought this was really significant. We still have a minute left. I try to keep these down to 30 minutes, and I thought this was significant. Look, then nobody's going to kick us off if we go over a minute, but Bitcoin ETF, what you should know. Well, the point that I saw, okay, and this is not the article that I wanted to show you, so just bear with me for 1 second. I'm asking for a lot, I know. Just I wish I had the article up sooner. Maybe I have to just type it in. Okay, I found what I'm looking for, and I think this is um, so so significant. Okay. And okay, I found it. Well, let me go there. Yes, let me go there. Okay. Let me make this a little bit bigger so you could see this. I want to highlight something for you, okay? The all-in cost of a futures-based ETF could be in the 5 to 10% range once you take into account the annualized roll yield. That's what I was telling you about before. Okay. Says Matt Hoogan, Chief Investment Officer at Bitwise Asset Management, which has its own application for a Bitcoin futures ETF in line at the SEC. So the expense ratio of like 0.95% doesn't tell the whole story, but at 5 to 10%, because of that cost I told you about rolling short-term futures into more expensive longer-term futures. I mean, if this is 5-10%, that'll eat into the fund pretty quickly. So you've got to really be nimble. And that is just the ultimate reason why this is really, I think, for short-term traders. And that's my story. I'm sticking with it. Philippe, I just want to make sure I address you, buddy. Better to own physical, in my opinion. So my answer would be yes. Okay. I got you. I got you. Gold, I don't like any of these ones. Well, the thing about gold is when you hold a gold ETF, you don't have to insure it. You don't have to pay to, rent at a depository to store it in a safe. Um, so and it's easy, it's liquid, it's easy to buy and sell with the GLD, and the expense ratio is pretty low. But I hear you. Some people just want to own gold. Some look, you know what, Filippo? This is what puts the personal into personal finance. Some people prefer the gold. Some people prefer the ETF. Okay. Um, in a gold rush, sell shovels. This is just another way for the hedge funds to make money off of retail investors. Mitch, you're too smart for this party trick of theirs. Yeah, thank you. Great intro. I am too smart. Too smart. Well, I appreciate it. It's better when somebody else says you're smart than when you say you're smart. You know what I mean? But thank you very much. Amazing points. No safe. Wow, great point. And that's it, man. So thank you, buddy. Thank you, Therese. Thank you, anyone else who is out there who checked us out today. I'm going to end this now, and I will see you tomorrow. Thank you for joining me.